Hey, in this video we're going to be looking at the double CCI strategy. It's one that commonly used in a similar sort of way to look at the market, or breaking up trends inside of trends and looking at the momentum inside of them. So without further ado, I'm going to go ahead and explain how the indicator works, the settings for the indicator, then we're going to run a 100 sample back test, and I'll meet you guys back with the results, and we can see if the indicator and the indicator strategy is effective or not, and if it's something you might want to use or think about when trying to become a better trader. Alright, so let's start with how this works. It runs off two CCI indicators, which is a commodity channel index, which is just a moving box. And we're going to set them up in a special way using some special settings. So here you go. The first one, this is going to be the longer term one, or we color the moving average red. You want to set the length for 150, and you want to set up the simple moving average for 100. And then you want to color red on the faster CCI that we're going to color green. You're also going to set the length for 100, but this time we're going to select the simple moving average and we're going to set it for 30. So you have a staggered one. You have this length set at 150 with the simple moving average at 100, and you have this one with the indicator itself set at 100 with a simple moving average of 1/5 of what total length is on this one. So that's what we call a 1:3:5 ratio, and you can take this and go ahead and color it red. So it's a very simple indicator. Now that we've set it up, you buy it when it crosses and you sell it when it crosses back over. You sell it when it crosses, and you buy it when it crosses back over. You can probably add some things to this to, make it more efficient, to optimize it. If you want to add a quicker cycle in there, a stop loss, yada yada, you might be able to make it a little bit better. But for this video, and just to understand how the strategy works and its basic function, we're just going to run it like this. This is more set up for a continuous chart, but it'll work fine for something with gap. So with all that being said, let me go ahead and hop right into the back test. Alright, I'm back with a back test, and it made some very interesting results. So let's take a look at them. You can see that here we started with $5,000, took 100 trades, we won 46, we lost 50. That means we won 46%, but we made some money. So how we do that? Well, it ran for a long time, and our winners were about twice as big as our losers, so a little bit bigger than that. And if you look at the really interesting P&L chart here, we had lots of small losers and then some big winners mixed in there. And they're mixed in there evenly enough that you see them relatively often. And that has to do with trend and stuff like that. So this is just the market battling back and forth, and then it starts to break out, and you're usually on the right side. It keeps battling, and you're usually on the right side. Whether it's up or down, it usually gets you into a break in one direction or another with some, minor difficulties in there, depending on how you do it. This is actually very similar to the way that I do a lot of my trading, and this allows me to do some sort of interesting scaling and stuff like that, where when I lose trades, I get larger, but not larger by much, where, I bet, 100, then like 105, then 110, then 120. Then when I get a big win, I reset, and that's sort of how I do it. And I start off, betting a very small amount of my overall cap. So that's basically how I do risk management on a very similar strategy to this. Mine's a little bit more complicated with all the momentum and stuff I use, but the P&L graphs end up looking somewhat similar to this. So that's why I kind of like this strategy myself. Remember, you should probably run this on your own time frames and tickers, similar back tests and stuff like that, always to ensure that it's going to work for you. And again, past performance is not indicative of future performance, and it's at the end of the day, it's all about your risk management. So this is only part of the puzzle. Thanks for watching. I hope you really enjoyed it and you learned some useful stuff about the market. If you like that, make sure to like the video and subscribe to my channel for more related stuff. And have a nice night.